edition of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the October 28th. Terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, and I believe that we should be pioneers of our future and never be prisoners of our past. So let's do everything in our day to make sure that we become pioneers. And as we begin our day, we should always remember that if you're tired of starting over, well then, never give up. Something to think about. Let's go see if these markets are going to give it up today. Hey, I'd love to hear from you. Our call-in number is 877-927-6648. Internationally, you can dial us at 727-445-1044. And then together, you and I, we can go hunting for bulls and bears. It is Terrific Tuesday. This is Tiger Financials Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow futures. They're trading up 46 points. Trading out at 16,802. S&P futures up 6, trading at 1963. NASDAQ futures up 17.5 points. She's trading out at 4,055. Russell up about 3 points, trading at 11.19. King dollar pulling back this morning. It's the euro that is on fire. It's probably the currency pair that is absolutely going to just blow people's minds away. We're going to watch the U.S. dollar index fall from grace just as it rose to kingdom status out there. That is, we're already seeing the beginning of that move. What is that going to do? It's going to send commodity prices skyrocketing higher out there. That's one of the things. Let's go take a look and see what's going on across the board out here by seeing what's going on over in Europe this morning. Hey, the DAX, Oktoberfest, looks like they're celebrating. Ooh, wouldn't it be nice to be drinking a beautiful brewed beer from Germany? Hey, let's go take the opening bell call, the Trader's Edge show. Let's go take the Trader's Edge and the Money Master show over to Germany out there. Of course, if I'd be coming to you at this time of the day, mid-afternoon, could have a few brews inside. But anyways, it's up 119 points, up 1 3/10% out there. The FTSE up 0.5%. That's trading out at 63.97, up 34 points. The Nikkei off 58 points last night. No big deal out there. It's trading out at closed out at 15,329. The Hang Seng up 377 points, up 1 6/10%. The Shanghai up 50 points. That's up 2% last night. But let's start off by taking a look at the currency pairs out here. Let's go look at the movers and the shakers out here. We take a look at the Euro futures. That's what we're going to go ahead and start with here. It's made a C point of the A to B equals CD to the upside. This is going to be the second A to B equals CD to the upside. You want to talk about changes in trend. It is underway as we speak. Of course, we won't know that for sure with certainty. And we all like to have certainty, don't we? Maybe, maybe not. If you trade these markets, you better like variety out there because you're going to get variety. If we take a look at that B point, that's the October 15th high. That price is 1.2893 in the futures contract. As soon as we see price catapult above that level and you're trading out at 1.2754, it's going to make its way up into about the 130, even Steven, maybe even right up to about the 131 level. And that is what's going on inside of the euro. So it's getting ready to just simply propel itself. Now, the key number to be watching, I think, where the sphincter muscles of those who are short, and you know what I mean when I talk about sphincter muscles out there, the sphincter muscles of those that are short, that sphincter muscle is going to really tighten up as soon as we see this little trend line here get broken inside the euro. So they're at this stage, they're still sitting on their net short positions, thinking that the euro is going to go to par or something along those lines, and I think they are going to be surprised. So here's the deal with regard to the euro. We have not begun to even see the short covering rally unfold. No. Now, the first A to B equals CD to the upside. Some people might have thought that was just a relief rally. Of course, we know that those A to B equals CD patterns, they have a lot more meaning than that. They are something to be paying attention to, and that's what you and I are going to do. We are going to pay attention to it. Once we start to see price get up towards that trend line and break that trend line, then that sphincter muscle is going to get really tight. That's where the short covering rally is going to come in, and then what we're going to see inside of the euro. And I know I can't tell you why it's going to happen. If you're going to ask me fundamentally why, well, don't call the show, because I can't tell you fundamentally why. I can tell you technically why it's going to do that. And what we're going to see here is you're going to see the euro get up to the 134 level. That's where it's going to form a larger Gartley sell pattern. Then when it gets up there, hey, maybe all cards are off. When is it going to do that? When is it going to get up there? I wish I could tell you, but probably towards the probably towards, I don't know, the middle of November or something along those lines. We'll see how long it actually takes. I'm not going to sit here and try to project time for you, but what I can do is project price, and I can tell you that the euro is on its way into that trend line right around that 130 level. That's what's going on inside that currency pair. Of course, boding well for the markets out here is your friend and mine. That's the euro, Japanese yen. As we take a look at this, this has now catapulted itself above the 0.382 retracement that's coming off of the high here from September 19th. Interesting that our market made a high on September 19th. The euro, Japanese yen, made a high on September 19th. How does that work? Well, it works because that's the carry trade. By the way, the low inside the euro, Japanese yen, that took place when? October 16th. Do you think there's maybe a coincidence? Do you think there's just maybe a small little chance that this currency pair correlates to our markets out there? Oh, yes, indeedy do. It does. And it means you want to be paying attention to it. Now, what do we have going on inside this currency pair? Well, if we take a look at it, one of the things that we're going to see is it's got an A to B equals CD pattern out here. So if we take a look at that A to B equals CD pattern, our A point is going to be the low on October 16th. The B point is going to be up here on October 20th. The C point is the retracement into October 23rd. This currency pair headed to the 1.3809-ish level. Is it going to stop there? No, not even close. It's going to head up to the 138.52 level. That's going to be your 0.618 retracement. Maybe when it gets up there, maybe, just maybe, and I suspect it'll get up there right around Tuesday of next week. Not that I'm calling time, not that I'm trying to give you a time target or a day target out here, but I'd have to say there's probably a pretty good chance that she gets up into that level right around that time frame, and that bodes pretty well for the markets out here. That's what's going on inside that currency pair. If we go take a look at the Japanese yen out here, right now basically flat for the trading session. The Japanese yen is in the process of forming what? Yes, an A to B equals CD to the downside. Of course, what we know the Japanese yen did was it made that very powerful 1 to 2 A to B equals CD move to the upside. It did that all the way into the October 1st time frame, little key reversal session. Came back up there to test its friends out. Now what it's actually doing, it's forming an A to B equals CD to the downside. Hey, if you'd like to understand these A to B equals CD patterns, this lightning bolt pattern, then go over to the homepage at TFNN.com tomorrow afternoon. For eSignal subscribers, I'm going to be doing a free workshop at 4:30 in the afternoon. That's tomorrow. Now, the easy way for you to get access to it, because we just absolutely love our tigers and tigresses out there. We've made it available to you as well. If you go to the homepage at TFNN.com, you'll see a little link under Breaking News. Free workshop with Steve Rhodes, yours truly out there. If you click on that, that'll take you to the eSignal sign-up page. So go do that now. The Japanese yen very likely making an A to B equals CD to the downside. That'll take price into about, I'd have to say, she's probably headed to the 103.34-ish area, 103.47-ish type area. That would form a one heck of a nice Gartley buy pattern out there. We'll see if that pattern unfolds. If we go take a look at the Great British Pound, go see what it is doing here this morning. Yeah, we're just taking a look at currency pairs. Looks to me like the sphincter muscle is getting tight for those that were short the Great British Pound. If we take a look at what it's doing, and you take a look at its trend line coming off of the high from July 15, 2014, that's going to be your first touch point out there at the 1.7191 level. Your next touch point is going to be that high out here from September 19th. That touch point was at 1.6525. Hey, guess what it's touching right now? It's actually just peeked its head above that trend line out there. That says you've got an A to B equals CD to the upside inside this currency pair. If we take a look at that price projection, you're going to use your October 15th low as your A point. Your B point's going to be the swing from October 21st. Your C point's going to be down here on October 23rd. A 0.618 retracement. The Great British Pound on its way up into the 1.630 level, the 1.6389 level. That does not bode well when we take a look at all three. In this case here, we took a look at four currency pairs, but really we took a look at the euro, we took a look at the pound, we took a look at the Japanese yen. All those are suggesting that the king is going to take a respite. And not a brief respite, but probably a pretty darn good respite out there. Let's go see where King Dollar's going to pull back to. It's going to be a fall from grace. If we take a look at its A to B equals CD to the downside, that's what it is forming out here. Your A point's going to be out here on October 3rd. Your B point's going to be the low on October 15th. And your C point, well, you could almost use the October 15th high as your C point. Technically, you should, but the heck with technicals. Every now and again, we use them as guidelines, as Mr. Barbosa would say. And what we're looking at here is you're looking at the U.S. dollar index headed down to, I'm going to call it the 8307 level. But let's take a look at retracements. I think maybe the U.S. dollar index falls even further than that. I'd say 8255. I don't know where that came from. 82.55 is likely it's a price target out there. Right now you're trading 85.33. You think that'll put some juice into commodities out here? I'd have to say the answer is yes. Of course, that's just my opinion out there. That's what I do each and every day, is I give you my opinion and only my opinion. If we go take a look at what's going on inside of the futures market, let's go take a look at the NASDAQ out here. Let's look at the daily chart for the NASDAQ. Boy, you talk about some strength out here. It's headed for the September 19th swing point. The low inside the futures market, the low inside that candle is 4,076. What have we seen so far? You've seen a move intercession to 4,063. It wants to get up to that wall. You want it on that wall, and that's what it's going to do. Now, I don't know whether it's going to be today, but that is where the NASDAQ is headed to. And then it's headed to places much, much higher than that. Because what the NASDAQ did, just like all of the other indices out here, they created one heck of a beautiful H.M. Gartley buy pattern. And you know the ultimate outcome of any Gartley buy pattern is that it turns into an A to B equals CD to the upside. So you want to know where the NASDAQ is headed to? Well, once it takes out that September 19th swing point high, that NASDAQ, she's headed to a price target of 43.93. And by Christmas, 45.85. This is Steve Rhodes. This is TFNN. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You know, like every Formula One racer, and that's what we've got out here. We were taking a look at the NASDAQ before we went to the break. You want to talk about strong moves? It doesn't get much stronger than this out here. In fact, let's go put the futures contract up, the continuous contract, I should say. Let me do that. Let me do that on a different page. It'll make it a little bit easier for me to not really lose my bookmarks of everything. Give me a moment here. I'm going to switch tabs and let's go take a look at the NASDAQ. Let's spend a little time out here on the NASDAQ. I think if I use this will get me all the continuous data. There we go. Okay. Now take a look at this V for victory shaped bottom out here inside of the NASDAQ. We're going to come back a little bit further and take a look at some of the other significant bottoms out here and see, just so I want you to picture in your mind, because we're all visual, right? That's how we really learned out here. Symbols, so important. I want you to take a look at that little V-shaped bottom, which is headed back to that September 19th level, and then it's going to blow that away, and it's going to move higher. Now, like all Formula One race cars, though, they've got to come into the pits, and all we're trying to do is try to identify when is this going to come into the pits. So that's a little retracement out there. So anytime we see that, what our objective is to try to find where's that pattern when it's ready to come out of the pits, because that's exactly what the NASDAQ is going to do. So, you know, we're back here now into the June 2013 time frame. Actually, June 24th, 2013. I think it was the June, or was it the October? Was the October 2013 created a pattern. I was looking for this pattern to complete yesterday. It didn't. That was the third time in 30 years that there was a pattern that actually formed down there that created that low. Yesterday was a golden opportunity for the market to do it. It didn't. That doesn't mean that last week's the October 16th low was not a major significant low. It most certainly was, at least the low going into the Christmas season this year. But if you take a look at even these last couple of bottoms out here, nothing as strong as what we have seen just partake out here. So really the whole mission is to try to identify. Look, I know QE is coming to an end, and I know the markets, back in May 2011, I think it was May 2011 when they announced QE, 2 was ending, the markets kind of went to the downside. All that stuff is factored in here. So that stuff has been broadcast. In fact, so we expect a little bit of a pullback. Maybe that's going to be that opportunity. Maybe that is the Formula One car coming into the pits to take a little bit of a pit stop. But it is not the end of the markets moving higher out here. There's no way. There's no possible way. Well, of course, there's a possible way. I can't control what the markets are going to do. But what we can do is we can take a look at what the markets are doing and make our judgment calls based upon that. If you watch us on Tiger TV, you see me just keep moving back further and further and further on the left-hand side to try to find anything that assimilates what it is that we just took a look at here in this bottom. And the answer is it's not out there. Or take a look at the NASDAQ out here. This is one of the strongest bounces. Not bounces, yeah. This ain't no bounce out here, folks. I'm now back to 2002. So that obviously that says even the March of 2009 that was not really well. I guess the March of 2009 is close. It's probably close as we can get. That's how important the bottom that actually formed here. On October 16th. The closest we can find to a real V-shaped bottom out here happens to be the one, and what you can see what actually takes place, and it's kind of a normal thing, is you'll see a move of a move. You'll see price get up, maybe we test that swing point, and just sit around there for a little bit. That certainly is what happened in 2009. I don't see any reason for that not to happen this time around as well out here. So the majority of the move may be over inside the NQ as it gets up to that September 19th high, and then just simply hovers around there for a few days, maybe a little bit of a pullback out there. But what you want to be doing is you want to be looking for pullbacks out here. I don't know what it is that's going to set that off. If I take a look at the 30-minute chart here for the NASDAQ, just to kind of come down and take a look at an intraday special out here. Yesterday we saw a move lower. It looked like that was going to be where we were going to maybe get a decent enough pullback out here. But let's face it, that gave way at 10 o'clock, 10:30 in the afternoon, 10:30 in the morning yesterday. It gave us a nice price relative strength divergence top. That was at 3:30. By 4:30 in the morning, yesterday, we got a confirmation of that. We had a seventh wave up pattern in the Chapman wave. It gave us everything. But the retracement, it was very small. It was about a 50% retracement, if that. Out here, price came down. We saw a little bit of a TAS market profile that began forming at 11 o'clock. Turn that down, Al. Began forming at around 11 o'clock in the morning. That level acted as support. Pullbacks have been far and few between. This is Steve Rhodes. This is TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 74 points. Trade out at 16,892. S&P up 9. Trade at 1970. Composite up 25 points. She's trading out at 45.11. Russell 2000 up 5. Trade at 1122. DAX up 138. FTSE up 36 out here. Leading the chart to the upside, it is Receptos Inc. up 35%. Maybe some kind of buyout or something out there, or just simply rocket ship to the moon up $24. Let me see out here. No rising on positive phase 2 trials out there. Hey, how about this? On fire this morning, Buffalo Wild by 22% out there. Earnings at $21.7 million versus $17.8, and revenues looks like you're eating a lot of chicken wings out there. Revenue is $373 million versus $313. Also, you got Tesla up 8 points. That's trading out at $230. Amgen up about 4.5%, up $7. I'm trying to multitask here. Type faster. Let's see. Camera zoomed down. Still looks good, though. Oh, no. Turn that thing off, Al. Let's take a look at Madison Square Gardens. That's up 11%. That's up $7. Parker Hannifin up 5%, up $5.92. To the downside, Martin Marietta, MLM, That is off about 7%, down $8.65. Twitter down 12% this morning, off $5.86, trading out of $42.67. Metadata Solutions, MDSO, off 12%. Sanofi, SNY, down 8%. Starwood Hotels off 3%. MSC down 3%, off $3. So we got a little bit here for everyone. If we take a look at, let's see, I got a question in the dead. It says, Stevie-san, on September 19th on the diamonds, 9.3 million shares never got tested. With a lower volume candle, is that a tell that we will revisit the 919 candle? Or am I just completely wrong? I wish I could answer that question and tell you that you're completely wrong. I can't. How can I do that? I can't control what these markets are going to do. But let's go take a look at what Peak D is looking at out here. And so let's go take a look. Let's try to answer that question as best that we can. And let's try to take a look at the SPY, because that's what he's looking at here. And I know exactly what he's looking at. Let's make sure that we all do. He's taking a look at this high volume low out here, what I'll call a capitulation low, October the 15th out here. So we take a look at that. That low had volume of 380 billion shares. And the philosophy, the belief is that when you have a high volume low, that swing point is going to get tested. I would hearken to say that's true. That's mostly true in an individual stock, not necessarily true when you take a look at an index ETF. And I think you have to put it in perspective, to put it into to correlate this. I would say that you need to go take a look at what's the underlying instrument for the SPY. It's the S&P 500. So what is it that are the signals that came out of the S&P 500? Because I would say that's even more important. If we take a look at this, we go back to the SPX right now, and we take a look at it. What we are going to see, let's go ahead and get rid of that A to B equals CD that's out here. There we go. If we take a look at the S&P 500 as it was moving down there, what it did, Mr. Peak or Mrs. Peak D out here, went ahead and formed that nice little hammer candle. Now, it formed that hammer candle at the end of an A to B equals CD to the downside out there. And the A point was up here on September 19th. The B point was down on October 2nd. And that C point, which was just about a 55% retracement, so makes a 1 to 1.618 A to B equals CD, does it with a hammer candle out there. That's a beautiful thing. That is, you don't get better reversals than that. That is called a Gartley buy pattern. Gartley buy patterns have 5 potential outcomes. Those 5 outcomes, we're watching them unfold as we speak. That first outcome is a dead cat bounce, a 0.382 retracement. That second outcome is a 0.618 level out here. Oh, come on, don't do that to me. Referring to my program here. There we go. That second outcome is a 0.618 retracement. Well, shoot, that got blown away a couple days ago. Where's the S&P headed to right now? 1976. So it's headed to 1976. That's your 0.786 retracement. Literally, if we're supposed to trade what we see, and I believe that we should, that means we have to tune out everything. That means we absolutely have to tune out everything. And when we looked at the NQ, so when I took us back and took a look at the NQ, that's the real strong dog out here. It's the NASDAQ, and it's going to be the Russell 2000 is going to go ahead and take the market higher. NASDAQ's already resumed the role of being the lead dog out here. So that's already in place. So you've got to also go take a look at the NASDAQ out there. And if we take, maybe it was the diamonds that he was talking about? Oh, it was the diamonds. It still doesn't matter. It's really the same thing. So Peak D was asking about the diamonds. I'll go take a look at the diamonds. If we go take a look at the Dow out here, the Dow didn't form an actual hammer candle, though. Let me do this here. But the S&P did, and the S&P is kind of a wider swath of the market, in my opinion. What the Dow did, where the Dow diamonds did not, is you're going to see a morning star pattern out here. So I'm just going to delete my A to B equals CD pattern. I'm going to delete this retracement level out here. And so there was a 3-candle formation inside of the Dow. Now here inside the Dow, if you take a look at it, this candle pattern here between October 15th, the 16th, and the 17th, big, huge morning star reversal. Again, at a 1 to 1.618 A to B equals CD to the downside. At a Gartley buy pattern out here. The Dow has had a couple of stocks just get pummeled, just absolutely pummeled. Yet if you take a look at this little V-shaped recovery out here, doesn't get too much better than this. Not as strong as the NASDAQ's, but you know what? Pretty darn strong out here. Pretty darn strong in the face of IBM getting crushed, in the face of Coca-Cola getting crushed, maybe a couple others as well out here. If we go back and we take a look at the Dow Diamonds, we take a look at the DIA, remember, I guess, how do I do this? Let me see. Let me do this and answer the question, because sometimes this gets overlooked. So let me do this, because I don't want this to get overlooked. This is important here for you. I'm going to put this slide up on my screen here. Okay, so this is the Stevie trading pyramid. Now, you're all familiar with different pyramids out here. Like this is a pyramid that you really absolutely need to pay attention to if you're a technical trader. Now, of course, all that I'm sharing with you is just simply my opinion. Okay, just my opinion. But when I take a look at the way that stocks move, the way that a market moves, the way that indices move, the way that currencies move, the way that commodities move, and you're trying to be a technical trader, there is 4 different elements that make up that movement. There's not just one element. And what Peak D was kind enough to share with everybody was, hey, aren't you overlooking that high volume low inside of the Dow Diamonds? Now, if I were only going to focus on just one thing, as Curly would tell the guy, what's the name of that movie out there? Just one thing. City Slickers or something like that. But I'm suggesting to you that you don't just look at one thing, that you look at 4 areas of every stock. You understand 4 areas, and you become a master of any one of these different technical tools, and you apply that to the stock that you are trading. What will happen is that your trading will improve substantially. So when it comes to volume, you can use volume. I would suggest, if you're going to use volume in today's marketplace here, that you use volume basically one way. You go take a look at the QQQ, and you go take a look at high volume days, and you'll understand that those high volume lows never get tested, and what they become is capitulation lows. To tell you the reason why, does it really matter the reason why? All I can do is give you a hypothesis. I'd rather give you facts. And those are the facts. Those are the facts that the guy from Dragnet, what's his name? Sergeant, it wasn't Friday, was it? Who's the other guy? It was Friday, and who was the other guy out there? No, was it Friday? Was it Joe Friday? Yeah, I guess it was Joe Friday. Those are the facts, ma'am. And I want you to understand, when you take a look at volume, if you want to look at the most consistent volume pattern that exists, I'm talking about now for the ETF structures out there. It's going to be the ETF structure for the Q. The absolute most consistent volume pattern that is out there. If you're looking for volume patterns inside of individual stocks, volumes of untested swing point lows, that works all the time. That works like clockwork. But it does not work inside the ETF structures out there. And I really can't tell you the reason why. Now, you don't have to use just volume. You can use the demand index, the money flow index, the on-balance volume, volume rate of change. Those are all different tools that are available on a number of different charting applications out there. But just use one. And become comfortable with one that is working, that you can go back, that you can back test, that if you would have used, would have assisted you with your trading out there, and that will help you. The second area that you want to focus on is momentum. Momentum. When we took a look at that V-shaped formation inside of the NASDAQ, boy, that was telling you a bunch about momentum. Now, you can use the RSI, relative strength. You can use the stochastic. What I can tell you, because I've gone back and I've looked at it, those two correlate 80%. There's an 80% correlation. You can put both on your chart if you want, but you're just wasting space out there. You really just need to focus on just simply one of them. Become a master of one of them. If you want to use the Williams percentage R, that will do it. If you want to use the CCI out there, that will do it as well. But focus on just simply one of them and take care of momentum and speed. Volatility, use the Bollinger Bands or Keltner channels or the relative volatility index. There's a number, I have not listed all of them, by the way, that fit into these categories, but I've listed some of the more popular ones. And then finally, you've got the energy, the angle, that power law vector indicator that David has built in the Art of Time in the Trade charts out there. That's a beauty. You got the Gann swing bands, you got the MACD, you got moving averages. All those things are going to help you to understand what's going on. But that's the trading pyramid, and that's the type of trading pyramid that you want to technically be able to take a look at in each of your stock charts out there. If you do that, your trading is going to improve substantially out there. So we take a look at the Dow Diamonds. Hey, right now, a nice tool out here happens to be the TAS market profiles. And inside of the Dow Diamonds, prices just hit that top of that level, 168.66. You're trading 168.39. That is deemed to be a resistance level. You get above that, boy, that tells you absolutely should not be short. The Dow Diamonds. Remember, the Dow Diamonds kind of one of the weaker links out here. At least with regard to it's the only one that's had a real deep retracement, which was on October the 22nd out there. So this market is, and I get emails every day from folks out there, and and people are like, how can you have so much conviction? Now, do you really want me to show up here in the mornings and do this show for you and have no conviction? Look, when I'm neutral, I'll be neutral, and I'll have conviction behind that neutral stance. And when I'm bearish, I'll have conviction behind that. And I'm willing to change my opinion. It's now 9:46. I'm willing to change it at 9:47, but only because the market shows us something that needs us to change that. And at this stage here, when the market was crashing lower, I was suggesting to you the market is going to form a major, significant low. You know that. You were listening to the show. You heard me say that. And that was in the face of Ebola, ISIS, markets coming crashing down, liquidity events that were going on, people dumping good stocks, people just raising cash, doing whatever they were doing. And I didn't once flinch from that conviction, did I? And I still am not going to flip from that conviction. When do I? Look, those hammer candles get taken out in the S&P on a daily basis, and on the S&P on the weekly basis. Then I change my conviction. Then I change it. But I've got to, and I know that you want me on that wall. And all that really means is you want me to call it the way that I see it out there. Go subscribe to my newsletter. I put a chart in there this morning, and I'm not going to share that chart with you, but go sign up for it. It explains exactly why I was able to go ahead and make that call. Look, it's called mastering probability. I just simply was putting the probability at my side and then taking a look at some of these other patterns out there that are inside of the marketplace that help to confirm that. And, and the Qs is a perfect one. The Qs, it doesn't get any better than this, really. If you take a look at that low that formed out here inside of the Qs, big high volume capitulation low on October the 15th with 108 million shares out there. It doesn't really get any better than that. Now, none of this means that I'm right about my calls. It just doesn't. That's the beauty about everything that we've got going on here at TFNN. Each individual brings their own outlook by looking at the charts to the game versus other networks out there, let's say. Okay, and each of us have the same kind of conviction behind what it is that we say out there. And that's really the beauty. That's actually that's the market that we trade out there. I promise you that the person that is selling has got as much conviction as the person that is buying out there. That is this market. That is the beauty of this market out here. And so you should always want to go to places where there are different opinions so that you yourself can take that information, you can measure it, you can go back, you can apply it to your trading, and then really go from there. I wish that I had that crystal ball to tell you what it's going to read in tomorrow's newspaper. If I could give you any gift, it would be tomorrow's headlines inside the stock reports out there, because I could make you all gazillionaires, right? But I can't do that. But what I can do is I can take a look at the past, I can take a look at the present, and it's really all about being present out here, and just simply each moment that I come to the screen, just be willing to take a look at the new information that is out there and see what it says. If we take a look at the Qs, as long as we're out here, and I don't mean to be on a soapbox or anything out here, and I hope that's not how it's coming off, but I get a lot of emails from folks out there, some of them saying I'm crazy, and I am. I am crazy passionate about what it is that I do, which is why I love being here with you. The Qs are coming into September 19th. 46 million shares out there. Yesterday we went up with only 30 million shares. We'll see how it's going to handle that swing. Hope you're ready.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. I had a request to go take a look at Facebook. So let's go take a look at Facebook right now, trading out at $80.93 out here, having taken out a swing point here from September the 30th. That swing point had 36 million, about 36, was it 30? 30, yeah, 36 million shares. That was taken out with about 35 million shares, and then 32 million shares, and 30 million shares. So you're up over a swing point today so far, about 6.5 million shares. Not too bad for an hour and a half worth of trading out here. Nice big move off of the lows out here from October. Let's put this back on a little bit longer term chart out here. Let's go take a look at this on a weekly chart, Facebook, and take a look at the A to B equals CD patterns out here. So I'm looking at the small one. The small one meaning I'm coming off of the November 2013 lows. The high out here, the B point's going to be March of 2014. Now, there were 271 million shares on that swing point, and that was taken out with 338. So that gave you a confirmed A to B equals CD to the upside on the weekly chart. of 84.48. And it would look to me like that's where Facebook is headed to, at a minimum, because it also has a larger A to B equals CD pattern to the upside that would say that 92.38 is in store for Facebook. So Facebook looks pretty good out here. That's what the weekly charts show. So it looks like over the intermediate term, that is where that is headed to. If we go back here and take a look at a couple things that, so you got the Dow's up 60, S&P up 9, Composite up 36 points. If we take a look at Twitter, though, let's go see what Twitter is doing here. Gapping down this morning up 13.5%, off $6 and change. If we take a look at Twitter, pull this back a little bit further, it's right inside of the gap. It's sign of strength. Remember, in this case here, how I want you to view gaps is gaps are your friend. And when things pull back to a gap, sometimes that has a negative connotation. And maybe I've even been guilty of that. So I have tried to rectify that if I have been guilty. Because what gaps are is nothing more than a sign of strength. In fact, they're a really large sign of strength. It's basically a wide-ranging bar out here, only you can't see the bar because it's invisible, because it gapped up. So what price is doing now, and what's what we want to pay attention to, that sign of strength was July 30th inside of Twitter. And that was 116 million shares to the upside. Now, you've done 27 million shares to the downside here this morning. Not really good in an hour and a half. No, a half hour. What do I mean, an hour and a half? Looks like I'm closing my show, only a half hour of trading out here. So volume is pretty heavy. And that says that in this case here, where I was asked about the high volume low, if in fact Twitter pulls back into the July 29th area, 37.99 to 38.92, and it's pulling in with a volume of more than 65 million shares, you know what? Twitter could easily go down and test that high volume-ish low from May 7th out there. That would be your buy point out here around 29.51 to maybe 36.10. So it's a pretty wide spread out there. But that's what it looks like, at this stage of the game, with it being below the swing point. That swing that we're looking at is August the 8th out here, and that only had 14 million shares. Pretty good chances coming at least back to the breakout area from, which would really say the price level would be the July 18th area. That would be, in essence, its first target, around 35.95, 37.08, somewhere around there. That's what's going on inside of the Twitter fear out here. Hey, you got gold is up $1, silver's up 11 pennies out here. Again, the euro, Japanese yen, that's on fire. The euro is on fire as well. The pound is on fire. It's trying to change its trend out here. And all that bodes well to a U.S. dollar index that may not want to give it up so easily, but has no other choice. Well, folks, it is terrific Tuesday. Thanks so much for joining us here. Have a great day. I look forward to seeing you very soon. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.